Investing for the first time is scary. You've got some money and you're looking to invest, but how do you get started? You look at a few financial websites and brokerages and find there's thousands of companies. Each web page is filled with numbers and words you don't understand. Where should you start? What does it all mean? Welcome to this stock market analysis video on understanding investment websites. By the end of this video, you'll be able to look at a page for any company and understand what you're looking at and what it means. And you'll be able to use it to make wise investment decisions. Let's get started. There are many websites and apps which will give you information on a stock you are considering. Fidelity, TD Ameritrade, Vanguard, Charles Schwab, Robinhood, E-Trade, FastGraphs, and M1 Finance, among many others. I can't show you them all in this video, so I will just show you Yahoo Finance. Why Yahoo Finance? Because it does not require an account or a subscription to show you this information. That makes it easier for you to access this whenever you want. Whatever broker or websites you prefer to use will have similar information but may have it rearranged. If all else fails, you can always come back to Yahoo Finance to find the information I am showing you today. The investment websites out there have an immense amount of data that can be overwhelming. I'm going to point out the most important parts to look for when analyzing a company. This is Yahoo Finance's page for Apple. The first tab we are looking at is the Summary tab. At the top of the screen, we see the share price for Apple is $253.70. The plus 12.29 is showing that the share price went up $12.29 today, which is 5.09%. Let's look at market cap. Market cap is how much the company is worth based on share price. Apple is currently worth over $1.1 trillion. Typically, I want to buy stock in large companies like Apple. Larger companies are usually more stable, are more likely to beat out smaller competitors, and have more staying power. Beta is a measure of volatility. Volatility is how much the stock price goes up and down. A stock with a beta of 1 is moving at the same volatility as the market. A stock with a beta greater than 1 is moving with greater volatility than average, and a stock with a beta less than 1 has less volatility than average. Apple's 1.17 is a little higher than average volatility. I prefer companies with a lower volatility because it reduces stress for the investor. The PE here is the price to earnings ratio. For a video explaining the PE, please click the link at the top of the screen. Typically, the lower this number is, the better. A PE of 20.15 is higher than I would like to see for Apple at this time. Forward dividend is how many dollars Apple will pay you in dividends per year for every share you own. In this case, that is $3.08. The yield here is 1.28%. For a video explaining dividends and yield, click the video above. A 1.28% yield is fairly low, and I prefer to buy in with a higher yield. The ex-dividend date is the date by which you must buy the stock in order to get the next dividend payment. If you want to buy Apple for the dividend, you will want to buy it before this date or whatever the next dividend is, or you will have to wait a quarter to receive the dividend. The 1-year target estimate is the share price analysts have predicted. Analysts have predicted Apple's share price will be $307.59 in 1 year, a significant increase from where it is now. Moving on to the Statistics tab, we find a lot of information. This compares the current market cap, the total dollar value of the company, to its market cap in past quarters. We want to see companies that are growing. Prior to the recent drop, Apple was consistently growing. Enterprise value is the second measure of a company's total value. Unlike market capitalization, which is just based on share price, enterprise value includes the market capitalization of a company, but also short-term and long-term debt as well as any cash. Apple has a lot of cash. This measure has also shown growth over time for Apple. Trailing price to earnings is the price to earnings for the last 12 months, whereas forward price to earnings is the price to earnings based on what analysts believe the company will be earning in the future. The forward PE is lower than the trailing PE, which means analysts expect Apple's earnings to grow in the future. This is another good sign. The PEG ratio is the price to earnings to growth ratio, which will be covered in a future video. This metric is essentially price to earnings with expected company growth factored in. Ideally, we would like this to be closer to 1, although you can see a 1.5 is better than it has been for most of the past quarters listed here. Next, we have price to sales for last year and price to book for the most recent quarter. If you don't understand price to sales or price to book, click the links at the top of the video. To summarize, both price to sales and price to book are much higher here than I would like to see. Next, we have enterprise value divided by company revenue and the enterprise value divided by EBITDA. EBITDA will also be covered in a later video, but it stands for earnings before interest, tax, depreciation, and amortization. Much like the rest of the metrics in this section, both of these last two ratios are used to value a company. Subscribe to this channel for future videos on both of those valuation measures. When we scroll down, we see the financial highlights. The profit and operating margins are telling us how much money the company keeps for each dollar of sale. The bigger the margin, the more money they're keeping because they're not using it for production, advertising, or other expenses. For Apple's industry, profit and operating margins of this size are excellent and quite high. The return on assets and return on equity are also excellent for their industry. Return on assets shows how profitable a company is relative to its total assets. It demonstrates how efficient a company's management is at using its assets to generate earnings. Return on equity is similar, but compares net income to the shareholder equity. Revenue is the total amount of money or sales they made in the last 12 months. In the last year, they made over $250 billion. We want to see Apple is growing its revenue, and we see its year-over-year growth is almost 9%. Now we are looking at the Financials tab. We will discuss what revenue, gross profit, operating expenses, interest expense, and so on means in later videos. A main take-home point for you as a beginning investor in this video is we want to see revenue, income, and profits increasing. If expenses are increasing, we want the money coming in to increase faster than those expenses. So without getting into the details of these different areas for now, let's see the changes in the numbers. Total revenue progressed from $215.6 billion in 2016 to $267.6 billion in the last trailing 12 months, or TTM. That's a good sign. Gross profit went from $84.3 billion to $101.6 billion. Income before tax rose from $61.4 billion to $67.7 billion. Without getting into the details, these increases are a positive indicator for the early investor. As a summary, expenses increased, but the amount of money Apple made increased even faster. Let's scroll down. One line I want to highlight for you here is net income available to common shareholders. This amount represents the amount of earnings that a business could pay out to the owners of its common stock, which would be you if you invested. They do not have to, and I would not expect them to pay out all of it, but that is certainly a line we want to see grow. It grew from $45.7 billion to $57.5 billion since 2016, another good sign. Last for this page, look at the number of shares. Every year we see the number of shares have been decreasing. That is because Apple has been buying back its shares. This reduces the amount of money Apple has to pay in dividends and increases the share price. Most investors prefer this and see it as a good sign. Issuing more shares typically means the company needs to raise more money to continue to grow or survive. Buying back shares like Apple has means the company has so much extra money it can buy back its own shares. Looking at the side, we see that Apple has been consistently beating the earnings predictions made by analysts for the last 4 quarters. In other words, Apple has been earning more money than experts have expected each quarter for at least a year. On that note, let's look at the Analysis tab. Here we see what the experts or the analysts are expecting for Apple. In case you don't remember, Apple's current earnings per share is $12.60. Analysts are expecting that to go up to $15.11 by next year in 2021. That is a very positive sign. We look at revenue. Revenue was a massive $267.68 billion for the last 12 months. Analysts are predicting around $300 billion for 2021, a big jump and an enormous revenue. Let me give you a quick comparison to put that in perspective. GDP, or the gross domestic product, is the monetary value of all finished goods and services made within a country during a specific period. Pakistan's entire gross domestic product for 2017 was $305 billion. Next year, Apple may make as much money as all of Pakistan did in 2017. That's well above Finland, Portugal, New Zealand, Greece, or the other 145 other countries Apple's revenue is expected to beat. Down here, we see Apple sales is growing at 12.5%. That's a great sales growth rate. Looking at the bottom of the page, we see the growth estimates. Although it is expected to decrease in the current and next quarter given the current global problems, it is still expected to grow 7% this year, almost 19% next year, and an average of almost 12% per year for the next 5 years. That is again a great sign for Apple. What have you seen on Yahoo Finance or other websites you didn't understand and wanted more information about? Leave a comment below and I will add the answer to your question in an upcoming video. That wraps up our introduction to understanding investment websites like Yahoo Finance. Although you may use other pages, you will find the same information on your preferred website. To keep this video length manageable, I did not give extensive details on every piece of data listed on Yahoo Finance. However, I will be creating new videos every week which will be explaining this information and much more about investing. If you intend to invest in the stock market, you won't want to miss this important information. As always, good luck with your investing.